Hello traders, welcome back to the Forex Gig, where we dive deep into the tool that can help you make smarter trading decisions. And in today's video, we are going to be talking about the Stochastic RSI Indicator on TradingView, one of the most powerful yet underutilized tool available for traders. This hybrid indicator combines the sensitivity of the stochastic oscillator with the momentum measured capability of the RSI, giving you a significant edge in identifying precise entries and exit levels on the chart in the market. Whether you are struggling to time your trades or looking to enhance your current strategy, this indicator could be the missing piece in your trading toolkit. So stay with us until the end of this video as I will share a step-by-step trading strategy that can be implemented immediately to potentially improve your trading accuracy and profitability. We start by understanding what this Stochastic RSI indicator on TradingView is. This Stochastic RSI indicator on the TradingView is a powerful momentum oscillator that combines two popular technical indicators, which are the relative strength index, which is known as the RSI, and the stochastic oscillator indicator. This is the combination of these two indicators. Unlike the traditional RSI, which measures price momentum directly, the stochastic RSI measures the relative position of the RSI within its own highs and lows, between its own highs and low range over a specific period. This makes it significantly more sensitive to price movement and capable of generating signals faster than the standard RSI. This indicator is calculated using a straightforward formula, which is the current RSI minus the low RSI divided by the highest RSI minus the lowest RSI. So I repeat, the stochastic RSI formula is equal to the current RSI versus minus the lowest RSI, all divided by the highest RSI minus the lowest RSI. This calculation essentially takes the current RSI value and determines whether it should stand relative to its recent highs or low. The result is an oscillator that fluctuates between 0 and 100, providing you a clear visual signal about the potential market reversals. When you are looking at the stochastic RSI on your TradingView, you will notice two lines moving together. The percentage K line, which is typically blue and which represents the current stochastic RSI value, and the percentage D line, which is typically orange, as we can see on our chart. And this is a 3-period moving average of the percentage K line, which is the current stochastic RSI value. This is what it means. These two lines work together to provide you with a trading signal throughout their crossovers. This is what it means. It provides you with a trading signal whenever they cross over. This is what it means. Now let's look at the RSI as a particularly useful tool for identifying overbought and oversold conditions in the market. Remember, when the indicator rises above 80, it suggests an asset may be overbought, signaling potential selling opportunity. Conversely, when it is below 20, it signals or indicates an asset might be oversold, presenting a potential buying opportunity. These threshold levels are significantly different from the traditional RSI, which uses 70 for overbought and 30 for oversold, because the stochastic RSI tends to be more volatile and responsive. What makes this indicator especially valuable is its ability to adapt to different market conditions. By applying the stochastic formula to the RSI value rather than directly to the price, the stochastic RSI can provide meaningful signals even during strong trends. When the regular RSI might remain in an overbought or oversold territory for an extended period of time. This stochastic RSI would provide you with a perfect trend reversal when this RSI or the stochastic indicator might be lagging. Now, let's see if we can get a trending market to better explain what happens in the chart. As you can see, price is trending to the downside in this area, and we can see the stochastic indicator at this area was already signaling oversold region. As you can see, oversold, giving us areas where we could buy in, where we could sell in time. And as you can see, when price was pushing to the downside, it wasn't giving us any opportunity because it will be selling in a late area. But when price pulled back to a reasonable area to sell, it got to the overbought region, signaling selling opportunities. Now, the stochastic RSI also excels in identifying divergence between price action and momentum. When you see price action making a new high, while the stochastic RSI indicator fails to reach a new high, this cause a bearish divergence and could signal a potential reversal to the downside. Similarly, when price makes a new low but the stochastic RSI doesn't make a new low, this bullish divergence may signal an upcoming uptrend reversal. This divergence often provides some of the most reliable trading signals available for this indicator. This is what it means. Let's see if we can spot an example and know how to trade it. As we can see, at this area when market was making a series in a downtrend, this market was in a downtrend, but in this downtrend it was making a pullback, and it was making series of higher highs, higher lows to pull back, higher high. And at this area where market made a higher high on this chart, if we look at the stochastic RSI from this area to the next area, it created a lower low, signaling that price was going to continue to its direction to the downside. So divergence are very powerful tools that can help you signal market reversals. So let's see how we can apply this to a trading strategy using the stochastic RSI indicator on TradingView. Now that we understand what the stochastic RSI indicator is, let's explore a practical trading strategy that can be implemented immediately on TradingView. This strategy combines the power of the stochastic RSI with price action analysis to provide a high possibility trading setup across various market conditions. Let's begin by setting your chart. You have to open TradingView and select the preferred currency pair you would want to trade, and in my case I'm making use of the USD JPY. You have to add the stochastic RSI indicator on your screen, and when we want to edit this indicator, it is preferred to use it. I will recommend you using these settings. you can see on my screen. This is the settings that we should use. These are the standard settings. These settings work well for time frames of 15 minutes and above. But if you are trading on smaller time frame, you would have to consider changing your stochastic length to 8. You have to change the length to 8 if you are using a smaller time frame. Now let's see. The foundation of the trading strategy involves identifying market structure first. When you can identify market structure, and as you can see from the chart, we are making a series of bearish sentiment: lower lows, lower highs, lower lows, lower highs, lower lows. This is the present structure in the market. Before placing any trade, you have to determine the overall direction of the market. You could use a simple moving average of 180 period to your chart to help you note this trend, the market direction. Let's see if we will add our simple moving average to make it easier for us to spot the trend of the market. We'll change the signal to 180. As we have changed it to 180, price is above. Remember, the price is now below the moving average. When price is below it, we would only prioritize selling opportunities, but when price is above this moving average, we would prioritize buying opportunities. This approach ensures that you trade in direction of the dominant trend, significantly improving your possibility of success. For a buy setup, you have to wait for the stochastic RSI to drop below the oversold threshold. Now let's see a buying opportunity. Let's capitalize on a buying opportunity so that we better explain this indicator. Very good. This is when price is trading above the moving average. When price is trading above the moving average, we are meant to get, for a buy setup, we have to wait for the stochastic RSI to drop to the oversold region. Where we want to sell, where we want to buy is when price gets to the oversold region, and as you can see at this area, when price was below 20, this is the 20 line. When price was below 20 would be where would indicate us to buy in this area. Why? Because it is signifying an oversold region due to the market, the RSI, the stochastic RSI indicator being below 20. It signals oversold region and it is due for a potential reversal. However, you do not enter immediately when this happens. Instead, you wait for a confirmation in form of a bullish crossover before you enter your trade. When you see the stochastic RSI is trading below 20 in a buy trade, before you enter, you have to wait for the crossover to happen. And when the crossover happen, remember the percentage K line crosses above the percentage D line. For a buy trade, this crossover within the oversold zone provides a strong signal that momentum is shifting to the upside, and this is where we would want to take our trade. Immediately we spot that is where we want to take our trade and ride the trend to the upside. While for a sell setup, the reverse is the case. We would have to wait for we have to first of all wait for the stochastic RSI to climb to the overbought region, and as we can see at this area is above 80, and this is an overbought region. This suggests that the asset is overbought. Then we have to look for a bearish crossover. This crossover happens when the percentage K line crosses below the percentage D line. This crossover within the overbought zone signals that momentum may be shifting to the downside, providing a potential selling opportunities. And this is where we would want to capitalize on the trade, and we'll ride it to the downside. One of the most powerful application of this stochastic RSI is identifying divergence between price action and momentum. A bullish divergence occurs when price makes a lower low and the stochastic oscillator makes a higher low. When price makes a lower low, but the stochastic indicator makes a lower high. This is exactly where we would want to spot our bullish reversal. And as you can see, I'm trying to spot a particular reversal. Okay, as we can see in price at this area in price, we can see price made a lower low. As we can see, price made a lower low, while the stochastic RSI at this area made a higher low. This signaled a potential bullish reversal. This is what we saw. While when a bearish divergence happens, this happens when price makes a higher high. When price makes a higher high and the stochastic indicator makes a lower high. Now let's see an example on the chart. This should be a typical example. As you can see in this area on the market, where price made a higher. Okay, this is not a good example. Let's spot a better example. As we can see from chart at this area, for a bearish divergence, price has to make a higher high, while the indicator, the stochastic RSI, would make a lower high. This signifies that the reversal is to the downside and it signifies a bearish divergence. When it comes to managing your trade, we always have to use proper risk management. Remember that we have to place our stop loss order at logical levels based on recent swing highs and swing lows. For a buy trade, if you are to take a buy trade, for that buy trade I was about taking at this area, when you take a buy trade at this particular area, you would have to put your stop loss slightly below. You put your stop loss slightly below the recent swing low, and as we can see, this is the recent swing low here. We'll put it slightly below that area. Then if we are trying to take a sell trade, take a sell trade, and when we take a sell trade, let's assume we take a sell trade from this area. You would have to put your stop loss at the most recent swing high. This is where you safeguard your trade. Remember, take profit is also an important area, and there are several methods you can use to take profit. You can actually take profit using a fixed risk to reward ratio by aiming for at least 1:2 or 1:3, as the case may be. You can also make use of significant support region in a sell trade, while significant resistance region in a buy trade. Or you can also make use of trailing stops to capture extended move. This is how we can capitalize on our take profit level. The stochastic RSI can also help us with exit decision. Consider taking your partial profit when the indicator approaches the extreme levels. For a buy trade, when the when you sell from the overbought area, you can decide to take your profit when you notice price has gotten to the oversold region. This is the area you can decide to take out your profit, like in this area of the market. When price gets to the oversold area, you would take out your profit. While in a buy trade, when price gets to the overbought area, the oversold when price enters from the oversold area and gets to the overbought area at this area in time, this is when you can decide to leave your trade, as the case may be. So we have to always mitigate our risks and always confirm the stochastic RSI signal before entering or exiting a trade, to avoid trading without confirmation. Remember that you would always have to avoid trading during a sideways market or choppy market, because these indicators generate a lot of false signals during this period. You also need to avoid trading during low volatility or major news events when indicators become less reliable. By combining the stochastic RSI indicator with proper market structure analysis and risk management, you have a comprehensive trading strategy that can help you identify high probability trading setup and high probability trading opportunities across the market condition. Alright traders, we have come to the end of this video. If you like this video, engage with us in the comments below. We want to hear about your experiences. If you found this video helpful, do not forget to like, subscribe and turn on your notification bell so that you will never miss out on more trading tips and strategies. Thanks for watching, and I will see you in the next video.